What's up everyone, this is Investe, and today I'm going to give you a high-level overview of Nebius' most recent earning report. At first glance, when you look at those numbers, you may think, meh, it's not that impressive as they missed both revenue and expectations. But if you read everything, including the shareholder letter, the financials, and the earnings transcript, the story is not just about the numbers. It is infrastructure scale, it is capital intensity, and it is a massive 2026 execution bet. So let's break it down. So let's start with the growth. Q4 2025, revenue came in at $227.7 million. Q4 2024 was $35.2 million. That's about 6.5 times year-over-year growth. This is not incremental growth. This is definitely a structural scaling. Now zooming out, full year 2025 revenue was $529.8 million. Full year 2024 was $91.5 million. That's about 5.8 times year-over-year growth. Another thing we should note is that core AI cloud revenue in Q4 was $214.2 million. That's representing about 94% of total revenue. Nebius is rapidly becoming a pure AI infrastructure business. Now going into ARR, Nebius defines ARR as revenue from the last month of the quarter multiplied by 12. So this is a run rate measure, not trailing 12 months. At the end of 2025, ARR was about $1.25 billion. Their prior guidance had been $0.9 to $1.1 billion, so definitely they exceeded it. And here is the highlight of the earnings report. They're targeting $7 to $9 billion ARR by the end of 2026. That's nearly 7 times growth in 1 year. That guidance assumes massive scaling of connected and active capacity, which brings us to the real scoreboard, which is power. Nebius breaks down power into 3 categories. Because power equals GPUs, GPUs equal revenue. So the first, we have contracted power. Contracted power is the electricity secured through agreements with utilities. This electricity is not live yet. According to the Nebius reports, they're currently targeting more than 2 gigawatts contracted and targeting 3 plus gigawatts by year-end 2026. This is the future pipeline. Next, we have connected power. Connected power is infrastructure physically tied to the grid. Electricity can flow, but GPU may not be fully deployed yet. They're targeting 800 megawatts to 1 gigawatt connected by year-end 2026. This is mid-stage deployment. Lastly, we have active power. Active power is the electricity actively consumed by GPU servers, which means it is revenue generating capacity. They ended 2025 with approximately 170 megawatts active, exceeding their 100 megawatts target. They're converting infrastructure into revenue faster than planned. And as you guys already know, execution speed matters. Now let's get into the capital, because it is very capital intensity. Pretty much none of this happened without massive capital, right? Nebius is building physical AI factories, power, cooling, networking, GPUs, and full infrastructure stacks. Now look at the numbers. Q4 2025 capex was $2.056 billion. Full year 2025 capex was $4.066 billion. If you look at the balance sheet, they have $3.678 billion cash, $4.1625 billion convertible notes issued in 2025, $4.103 billion non-current debt, $1.302 billion non-current deferred revenue. On the call, they guided, this is kind of ridiculous, but $16 to $20 billion in capex for 2026. That is hyperscaler level capital deployment. Management also indicated that roughly 60% of required capital is already supported by liquidity, operations, and commitments. So to justify their spending, they must convert contracted into the connected, then active. And they pretty much have to do it fast. That's why 2026 is an execution year. Now, let's zoom out geographically. Nebius categorized sites based on the operational stage. Let me briefly define what these stages are. We got fully active. These sites are fully operational and generating revenue today. GPUs are live and consuming power. And these sites are Kansas City, Missouri, London, UK, Paris, and Iceland. These contribute to approximately 170 megawatts active capacity, just stay noted. Then we have partially active / ramping. These sites are delivering capacity in phases. Some infrastructure is already live, while additional capacity is coming online. We have New Jersey, which has capacity of 300 megawatts. This site is closely working with Microsoft, and per their earnings, initial Microsoft capacity was delivered in November 2025, and additional capacity coming online throughout 2026. We also have Finland site, has capacity of 75 megawatts. The expansion is ongoing and it is close to be completed. So these are going to be the major catalyst for 2026 ARR drivers. Then we have under deployment or development. The infrastructure is being built, but large-scale revenue generation has not started yet. And we have Israel site and France. So these two sites are going to be the catalyst for 2026/2027. And lastly, we have early-stage hyperscale projects. These are the long-term campus-style developments with multi-year build-outs. So we have the highlight of this is going to be the Independence, Missouri campus, because the capacity is just outstanding. It has potential capacity of 800 to 1200 megawatts potential. We also have Alabama, Oklahoma, and Minnesota. This is long-term hyperscale positioning. Now let's quickly look into the Nebius most recent acquisition, which was Tavily. I gotta give you a little bit of background information here. So as you guys already know, large language models are powerful, but they're not automatically connected to live web data. If AI agents need to either look up real-time information, verify sources, or extract structured content, they need a search and extraction layer. Tavily provides that. It is a search engine built specifically for AI agents. So instead of returning links for human, it returns structured output agents can directly use. Strategically, Nebius is moving up the stack. So they go from compute to platform and now agent enablement tools. This makes their ecosystem stickier. So if developers rely on Nebius compute, Nebius search, Nebius platform tools, switching becomes harder and harder. This expands Nebius beyond GPUs and into platform territory. Well, that's all I wanted to share with you guys today. Personally, I believe Nebius could be one of the next big investment opportunity, but it all comes down to execution in 2026. So I'll continue to keep you updated on major business developments, valuation analysis, and of course the risk. And thank you so much for watching. If you found this breakdown helpful, please hit the like button and subscribe so you can stay informed. And I'll see you guys next one.